What's up, subscribers and subscribers to be? Welcome back to the channel. I know I'm a little bit late doing my top stocks for this month, so for that reason, I'm going to combine my stocks for both months in this video. But before I jump into that, if you haven't already, make sure you go ahead and join my online stock market membership group. It's currently $20 for 6 months of membership. In order to join that group, you can cash out me $20. Send that to $MANSAENT. That's $MANSAENT. When you send that, make sure you include your email in the memo. That way I can send you the link with your username and password setup material and all that stuff. Once you have that, you can go to everythingmikes.com and you'll have exclusive access to different things that I have on the website, such as stocks that I'm buying, the information that's normally in my top stocks video before I make the video, any new purchases that I make, any new announcements I just want to give out to people and let them know. All of my stock information is on there. If you have any questions for myself or members, you have access to our blog once you pay for your membership. There's a lot more other things, but with that being said, I want to go ahead and start with the video. I did do a video explaining how to join the membership group. Just check back through my videos if you're looking to do that. So moving forward, my top stocks, as usual, I'm going to do them in order from the stock that I'm going to be purchasing the least amount of to the stock that I'm going to be purchasing the most of. And when I say the most, I'm talking about dollar value. The fourth stock that's on my list is going to be the Cheesecake Factory. The Cheesecake Factory is currently priced at $31. If you look at their 3-month history, it's been up about 16%, and that's pretty decent. That's actually a lot if you're looking at only a 3-month span. Overall, for the past year, they're down about 25%, mostly due to the current crisis that's going on. But if you look at the stock, you can see that they're slowly going up to where they originally were. I'm expecting this stock to get back up to about $40 sometime next year. So I'll probably be buying all while it's under 40. My target range right now is anywhere under 35 right now. So I'm going to continue purchasing as long as it's under $35. When you scroll down, you'll see that it currently does not have a PE, meaning that they're not really making any money right now. Their price to earnings is 0 or does not exist. I do think this is going to correct itself over time as its business begins to pick up and as they begin to open new locations. One of the things that I like best about this stock is that it has a dividend of 5%, which is extremely high. If you look at the 52-week high and low, the low is about 15, the high is 45. So the midpoint would be right around 30 bucks. So I'm looking at buying this stock anywhere around 30 bucks. Like I said, anywhere between 30 and under 35 right now. Currently it's 31, so it's a perfect buy for me right now. I scroll down, I'm not really too concerned about analyst ratings. Right now I'm on Robinhood, but if you're wondering. But like I said, I'm not too concerned about analyst ratings. Looking at the earnings, they're beating most of their earnings as far as what's expected for them. Q3 in October, I really want to see what that looks like. If they beat that, I'll probably be doubling down and buying more. And this will also be a stock that you see in the November video. All in all, it's a pretty good stock. But like I said, I'll be buying the least of this stock. In the out of the ones in this video, I'll be buying the least of this stock. So I'm going to go ahead and move forward to the stocks that I'll be buying more of now. Number 3 on my list is going to be VF Corporation, ticker symbol VF. They're currently $75. That's pretty much around the high for the last 3 months. They're up about 15% over the last 3 months since the whole virus thing has started. Over the past year, though, they are down about 16%. Also due to the current crisis that's going on. Let's see here. They're currently at about $89, $90 range, somewhere up in there. So they're about $15 below where they normally were. Let's see here. They have a PE of 87, which is extremely high in my opinion. But they do have a slight dividend, which is always good. If you have those dividends, that stock is always going to pay you. They have a 52-week high of 100 and a low of 45. That's a $55 difference. The halfway point would be about say 72. So the current stock price is 75. That's a little bit more than I would like for it to be. If it dips down below 70 bucks, I'll definitely start buying more. But it's a little too pricey right now. Skipping all this. As far as their earnings go, they're pretty much meeting what's expected. So that's good for right now with the whole with everything that's going on. I'm not sure what their Q2 numbers are, but they're going to be expected on the 23rd of October. So if this stock goes down around that time, I'll definitely be buying more of it. As you see right now, the stocks that I've showed you guys so far have had extremely high PE ratios. As we go down on my list, you're going to find stocks that are a little bit better, which is why they're placed further on the list. Let's see here. Number 2 on my list is going to be Cruise Logic, ticker symbol CRUS. I'm actually going to be buying the most of this stock, but being that my number 1 stock costs more, I'm going to be buying the most of that stock in amount. But as far as if you're looking at the total number of shares, the quantity of shares, I'll probably be buying the most of Cirrus Logic. They're currently at $61, which is about 12% below where they were 3 months ago. For the past overall year, they're up about 10%, which is average for a company. And that's one of the bigger reasons that I'm thinking about buying this. I do think this company is a lot better than the average company, and they aren't receiving that much money right now. Investors aren't really paying attention to it. So that's another reason that it's catching my eye. All right now it currently has a PE of 20. The average stock on the stock market on the average year normally has a PE of about 15. Over the past year, the stock market itself has had a PE of about 21, which is extremely high, but the average stock has been around 21. I do believe that Cirrus Logic is better than the average stock, so I do think it should have a PE that's way above what the average stock is right now. I actually expect this company to have a PE ratio somewhere about 40 or 50 for the way that people are currently investing, but I'm not seeing that currently in this company. They're beating earnings. Just like all the rest of the companies, we'll see their next report coming this October, but I actually expect them to exceed. A lot of people are worried about the company right now because of their biggest client, Apple. Apple is dropping headphone ports pretty much across the board. Their phones won't even have the chips that are needed for those ports anymore, which means that they're now going to be buying, in the short term, less chips from Cirrus Logic. But they're also talking about new technologies that's coming out that's going to involve new chips from Cirrus Logic. Being that people don't really know what that technology is yet or what those chips will be, and the company is currently taking a loss when it comes to the amount of chips that are being ordered now. A lot of people are panicking, and I think that stock is kind of taking a hit, or people aren't really realizing its potential right now for that reason. But I do think that right now is a good time to double down on the stock. Once people realize what new technology they have to offer, and they start to actually use that technology and start to buy it, a lot of people are going to realize that it's a good opportunity to invest in this company, and I think the company is going to. I think the company's stock value is going to rise pretty quickly over the next year. The number 1 company on my list, though, for September and October, is going to be Google, Alphabet Class C stock. This stock is currently at about $1,500. This is up about 5% from where it was 3 months ago. And this is up about 25% from where it was 1 year ago. It currently has a PE ratio of about 33. The average company is about 15. Google, in my opinion, is another one of those companies that is a lot better than the average company. PE ratio of 33 is pretty high, but for a company such as Google, I'll take that because I expect them to have a lot of growth yet to come in the upcoming years. Their 52-week high is about 1,700. Their 52-week low is about 1,000. So a fair price for this stock based off that would be in the $3,500 range. Right now, the stock is currently a little bit above that. But for me, I don't mind paying that price because of what's currently going on. With schools and everything, having most of their classes online, whether it's elementary schools, primary schools, colleges, or whatever, a lot of that stuff is being run through Google. Whether it's emails, most colleges, such as the one that I went to, you have to have a Google email address. A lot of primary schools and elementary schools have Google Classroom, which is also run by Google. I myself was a teacher for a few years, and most of my stuff was mandated to be done online, and most of that was through Google Classroom. Whether you know it or not, Google actually has enough cloud space and cloud data and information, as well as tools for teachers to use to almost run a school on their own, pretty much autonomously, without teachers or without as many teachers if they really had to. So that's my biggest reason for investing in Google right now, because I can almost see them taking over the education system at this point. And even outside of that, you should definitely research what Google, YouTube, and all their companies do, and you will see even outside of my theories, they have a lot going for themselves. I don't really pay a lot of attention to analyst ratings, but Google has a 90% buy rating. Like I said, I myself see what's going on. I think a lot of other analysts see the same thing happening, so it's definitely a buy for me right now. If you look down at their economic moat is extremely wide, meaning that they have few competitors who can do what they do. As far as their earnings go, they're doing great right now. Even with what's currently going on, they're doing great. With so many people being at home, there are more people than ever online right now, especially if you're looking at schools and stuff. So that's pretty much the main reason that this is that's the main reason that Google is my #1 stock right now. Cut off the screen record right quick. All right, and for the most part in this video, if you haven't noticed, I've been using the Robinhood app. If you don't already have the Robinhood app, there's a link down below in the description. If you use my link, we'll both get a free stock when you join. For the most seasoned vets and the people who need a little bit of assistance in learning how to do stocks, I also have a stock membership group. It's $20 to join for 6 months. You can cash out the $20 to $MANSAENT. That's $MANSAENT. Once you do that, make sure you include your email address in the memo. I'll send you the link for your password sign up and your username and all that stuff. Once you have that, you can go to everythingmikes.com. You can get all the information that all of my other group members have access to, join our blog, see our new purchases and all that good stuff. That pretty much wraps up this video. Sorry for the wait, you guys. Have a great day and come back soon to see us.
I'm at the bag, go get the money, count that cash and back to the money, put that on repeat. Go get the bag, and that's how we coming. If you really about your money, put $1 in the air. If you really about your hustle, put $1 in the air. You ain't taking else for nothing, put $1 in the air. You ain't got no hustle muscle, get the fuck up out of here.